Hi, welcome back to our 7th video. So in this video, I'll show you how you can execute a sell call order on the stocks that you own. So do take note that it is advisable for you to sell call is only when you have owned about 100 shares of the stock that you wish to sell call on. If you do not own the stock and then you sell a call option on the stock, it will be considered a naked call. So naked call is considered one of the riskiest moves. It's because if let's say the order is being filled, because you do not own the stock to sell it off, you have to purchase the stock at the current market price. Sometimes it could be higher than the amount that you are going to pay. So if possible, do sell call only when you own 100 shares of the stock. So in our portfolio, for today, we decided to sell call on Intel because we own 100 shares. And then we think that Intel may not go higher than maybe 37 or 38 for the next 1 or 2 months. So while we are waiting for the share price to increase, or maybe the share price is going sideways, we can also collect premium from it. So this is when we will sell call to collect premium because we own 100 shares of Intel. But if we do not own 100 shares of Intel, please do not sell any call. That will be considered a naked call. Okay. So now let's proceed to sell call on Intel. So let's click on Intel. So here is showing Intel. So now you can choose any of the options. The next expiration for Intel is October 20th. Maybe we want somewhere longer, like let's say for example, November. So let's click on November. And then let's look at maybe around 37, 38, where the premium looks quite good because we wanted to collect premium, but at the same time, we do not want to sold off our position. So maybe it's between 37 or 38. So you have to do your due diligence to see that whether will Intel suddenly has a sudden increment in the share price. Because if let's say Intel share price increases until the strike price that we set, like for example 38, if let's say Intel is going to rise above 38 for the next 1 to 2 months before the expiry date, then we will have to sold off our 100 shares of Intel at $38, which is the share price that we have set. Okay, so now let's do an example and illustration on how the sell call order is being done. So let's say we wanted to do a sell call at 38 on the expiry date on November 17th. Okay, so now here in the order entry, we see that this is the expiry date and this is the strike price 38. And now this one is now a call. And make sure that it is sell.
Order filled.
Okay, so this one order filled is another one, which is the Tyson market order. So now when for a market order, it is filled at $47.96. So this is the filled price for Tyson. So you can see that here it appears as 0. That means the position has already closed off. So let's go back because earlier on it was being refreshed. So now let's go back to sell November. And then here shows Palantir. Do take note that whenever there's a refresh, please check that here what is the ticker symbol is showing. So here shows Palantir, which is not the one that we wanted. So let's click Intel again. Okay, November 17. Don't immediately click submit because currently it's a buy. It's a buy of the shares. Why do I know it's buy shares? Because here it's not showing as put options or call options. It's only when we click on here, then you can see here, there's an expiry date, strike price, and here will show either put or call. But because I click on sell call, so here will appear as sell call. So here is red, red. Okay. So limit quantity one contract. One contract is 100 shares to sell off. And then the limit price will set, here we can see. So for us to sell call, let's set $1.20. So if this order is being filled, we will be collecting $120 of premium. Okay, so everything looks good, then we click submit. $120 of premium. So after less the commission, this is the premium that you'll be collecting. So sell. Okay, so -1 means sell call. Okay, once everything is okay, then click override and transmit. Okay, so now let's see that will these options being executed. Okay, so if it does not executed, then you can also bring down the premium. But usually for call orders, I'll just leave it as it is, because I only interested to collect premium. I'm not interested to sell off my positions at the moment. Or if you think that the company has potential to go higher, then maybe that is not the good time to sell call. It is advisable to sell call when the share price is not going anywhere, or you've done the research and found that maybe the share price will not increase to the strike price that you have set. So with that, I'll end this video for how to sell call, and thank you everyone. And in our final video, I'll show you how you can rectify the mistakes you have done. Okay, thank you.